Hey guys, so a couple things I wanted to go over today, and it has to do with market trends. So there's a lot of people talking about, waiting it out because markets go up and down and everything else like that. Let me just cut to the chase, okay? This is how most people, excuse the crude drawing, this is how most people look at markets, okay? This is how most people look at markets. They say that it goes up and it goes down, it goes up and it goes down, it goes up and it goes down. Okay, and that basically that if you're here, you got to wait till it's here to buy. Okay, or somewhere in the middle or whatever. But their mentality is that it's always going to go up and down, up and down, up and down, up and down. In stocks and stock trading, they call this a crab graph. Okay, this is usually a short-term type of thing. Like it'll only appear in the short term, but when you zoom out, right, to a macro perspective of this, let me show you what the graph actually looks like in regard to U.S. housing prices since 1890 to present. That's what it looks like. Okay, this is the actual type of thing. Okay, so excuse the crude drawings here, but you're looking at from around the Federal Reserve creation in 1913. Okay, housing prices started to bump up around the 1920s. They dipped around the Great Depression of the 1930s into the 1940s, where you had a bunch of production from the war. And then afterwards, they kind of stagnated a bit from the 1940s into around 1950. In 1950, you had the post-war boom, okay, and it increased housing costs a bit. So ever since then, it has just gone, as you can see, up, 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 up. You had a dip in the 1980s, okay, where you had basically, that's where everybody made a lot of money in Miami, all right, and other parts of the country that are coastal of that nature, but Miami is a big example of that. Then you had another dip in the 1990s. After that, though, it skyrockets until you have the bubble, 2008. Okay, we all remember 2008. It crashed, and then we're back up here. Okay, this is where we're at here. So that's an actual representation of what graphs look like. Okay, it's not. It doesn't do this. Okay, it goes up, and on the micro scale, you can see it doing the crab thing, right? And the tiny little thing within a year, maybe 2 years, right? A couple months, whatever. It doesn't stay like that. It doesn't go all the way back down to original trend numbers. It just can't do that, especially when you have factors like increased population, inflation, right? Basically, though, a lot of people are not focusing on the number one thing that comes into mind when it comes to this market, and that is supply and demand. Okay, supply and demand drives all markets. That's just how it goes. So when people tell you to just wait for the market to go back down, what they're telling you to do is based on a micro perspective and not a macro perspective. They're waiting for the market to have a little dip real quick. Okay, and a lot of people actually believe that it's going to eventually come all the way back down to, whatever it might have been 10, 20, 30 years ago. Okay, that's not how it works. It will go up on a trajectory. The trajectory is still up. Okay, your peaks and your valleys are still higher than your previous peaks and valleys. Okay, so even if it does a little crab here and there, it's still on a trajectory on the macro scale up. Okay, you have to look at macroeconomics and not microeconomics when you're doing tangible asset investment. You have to look at the long term. Okay, so right now, your peak, if we're peaked out right now and it's like high prices and it's at the peak, just remember in 10, maybe even 5 years, less than that, 5, 10, some 15, 20 years, whatever, that peak is still going to be lower than whatever the lowest valley is in the future based on these trajectories and trends. Okay, so people might say, wait for it to come back down. Okay, well, when it comes back down, the bottom of the down is still higher than the highest of the peak from before, because that's the trajectory of it going up. Okay, it doesn't go down and up and down and up and down up like a crab like I showed you. It doesn't do that. Okay, now supply and demand is the biggest thing here. What is driving supply and demand? low production of housing, okay, low supply of housing, and increased population. That's just how it goes. More people, there's more demand, right? There's more demand. And if you don't have the supply to meet that demand, prices keep going up. And we don't have the supply to meet the demand. The population is increasing faster than supply can catch up to it. Therefore, based on any basic mathematic metric, prices will never return to their previous lows. They can't. It's not that they won't, it's that they can't. And it's because there is a higher demand for these assets. So basically what I'm telling you is that it is a wise decision to analyze your situation and jump in when you can, not when you think the market is favorable. Because here's the deal. With the current trajectories of things and the historical trajectories of things over the past 100 years, they don't go back down. Not in the way you think they do. They may fluctuate a little bit. You might be able to get, instead of getting a 6% loan, you get a 5.9% loan or something along those lines. Look, that's a low, right? People are like, oh, it's still at 6%. Yeah, it's at a lower 6% though. And that's kind of the fluctuation you have to look at. Like, and if it does ever go back down to something along those lines, like you get a 1% interest rate or whatever, you still have to look at the cost of inflation. You still have to look at supply and demand. That just because you have a 1% or a 2%, 3% loan, and you're like, wow, but it was 6% before, it's so much lower. Right, it is a lower interest rate, but at the same time, you don't have the inventory to drive prices back down still. Your prices are still going to be high. Sure, you get a better interest rate, you still want to buy it or whatever, but that doesn't mean that supply somehow magically increases, right? There are multiple factors to this. You have to understand Gestalt. Gestalt is a German word that we use in psychology that means the study of the whole, right? All things included, all things considered. It's not just interest rates. It's not just the Fed dropping basis points or something like that. It does have to do with population increases. It does have to do with supply and demand. It does have to do with construction. It has to do with all these things, and you have to look at it all as a package deal, okay? So when people say, hey, wait, they're kind of usually focusing on the micro and not focusing on the macro, okay? And when people wait like that, you're still just going to get priced out eventually of your assets. Bite the bullet, okay? Even if you have to save up, you have to scrounge a little bit, if you get an asset under your belt, you're going to make money in the long run just off the equity alone, okay? I'm not saying to tap yourself out. I'm not saying to go into debt, like extreme debt or anything else like that. I'm not giving you financial advice on that. What I am telling you to do is to analyze the macro trends of economics, of housing markets, of these things, and all of it, right? Population increases and building and all of it. Look at the macro, okay? Look at the macro trends. Buy based on macro trends. And in that sense, any time is really a good time to buy in an upward trajectory market, okay? If you have a bull graph, right, rather than a crab graph, and we have just been in a bull graph since 1950, right? Like after the post-war, we have just been in nonstop, just it hasn't stopped. Then people are like, oh, it'll eventually go back down. When? When is it going to go back down, right? We've been born into it never going back down, okay? And if you're a millennial right now, you've never seen it going back down. And here's another thing, guys, okay? Look, anybody born after 1950, they've also never seen it go back down. Okay, so no one basically has seen it go back down. It doesn't work that way. It hasn't worked that way. Okay, it's a pipe dream to believe that it's going to just go back down to pre-war levels. And I mean World War II. It's not going to happen, right? So you have to capitalize when you can. Leverage your assets. Get as much funding, get as much program help, get as much assistance as you can to get in the game now. Get in the game now, okay? Always focus on competition. If you have lowered competition, get into it immediately. If you have higher competition, it's going to be more difficult for you to play the game. And you have to understand that the higher the population goes, the more your competition grows. So you're not going to see mass, like again, we don't have a black plague or something to come around and cull 60% of the population to make wages go up and to make real estate drop. That's just not going to happen, guys. Okay, we have vaccines now, we have modern medical sciences. There's just nothing that's going to just completely catastrophize the population to lower the supply-demand ratios. It's not going to happen. So as population increases, so too does competition. And you're not seeing a decrease in population, so you're not going to see a decrease in competition, which means that unless we have enough assets to go around, which we don't, building while building is increasing, right? They're building new homes. People are like, oh, but they're building so many new homes. I see construction all over the place, blah, blah, blah. Yeah, you do. And those things don't stay on the market for more than like, a month tops. All right, because people are buying them left and right. Why? Because there's so many people here. There's so many people in this country. Listen, they build 30,000 houses. There's still 340 million Americans out there. Okay, think about that. There's not enough supply to meet the demand. Okay, there's just not, and there will not be. The more and more population, and population is continuing to increase every single day, every single month, every single year. Okay, so supply and demand is an essential part to understanding markets. That's the bottom line. So the mentality you have to hold is that you have got to get yourself a tangible asset. Again, and maybe you don't have enough money to get into real estate, right? Maybe you just don't. Again, this is not financial advice, but finding some kind of tangible asset such as stocks, such as gold, precious metals. There's a lot of ways to convert your fiat into tangible assets so that you can have appreciating assets as compared to depreciating assets. But please understand that this is not reality. Okay, this is not how graphs work. This is not how the markets work. The markets don't actually do a crab on the macro scale in the long term. It doesn't work that way. Okay, again, this is actually, you can look this up. This is a real representation of U.S. housing costs. Okay, it's not going down, guys. It's not going down. All right, it's going up. So get in while you can, because eventually, again, you guys remember Bitcoin? Okay, when we had just, some of us had graduated high school, we were in early college and whatnot back in like 2007, 8, 9, that area. Okay, pre-2010. Guess what? All of us said, no way it's gonna make it anything. Okay, it was like a penny. You could buy Bitcoin for pennies on the dollar. It was just, they were just giving it away. Literally, they were just giving it away. Okay. Not a single one of us can buy one single Bitcoin outright usually at this point in time. Okay, no one has $30-some thousand in cash to buy one singular Bitcoin. The housing market is not going to be any different, and it's not any different. Okay, it's not. Eventually, you're not going to have the cash to put into it. Okay, that wealth gap is going to be insurmountable. So while you can, if you're thinking, you're sitting on the fence and you're like, I could buy a house. I might be strapped for cash if I do. I'll be a little tight for a bit. Be tight a little bit. It's not a big deal, okay? Be frugal. Maybe you don't get the DoorDash all the time, okay? Maybe you don't get to eat out all the time. That's fine. Start buying your groceries, guys. Honestly, it is cheaper to buy your groceries and cook your food than it is to eat out all the time anyway. Save some money and get yourself a tangible asset. So I'm going to tell you right now, that sushi that you put away in your belly, that doesn't appreciate in value. That depreciates out the other end of you, okay? You need to get a tangible asset that will appreciate in value. You have to. Because look, guys, the food you consume every day, that sushi you went out and got, or that burger you picked up or whatever, it's a fine little treat. But guess what? You can do without it. You can eat a salad at home. You can buy some chicken. It's really cheap. Get some eggs, something. Make yourself an omelet. Okay, it's better economically to be frugal and spend all of your money on getting a tangible asset that appreciates than to wait around and say, no, I'm going to save my fiat until the market drops a little bit. Every day your fiat is depreciating. Okay, every single day your fiat is depreciating. So by the time that you feel it's okay to buy in the markets, remember how that works, right? The low, the future low is still higher than the current peak. Okay, so don't sit around and let your money just dwindle and waste away. Okay, put it into a tangible asset of some kind. Make your money appreciate. Be frugal. Don't spend your money on dumb stuff. Okay, cook your own food. Be smart. Don't be tethered to the system like that. It is wise for you to invest in your future by investing specifically if you can, and by all means muster your resources to do this. Leverage your resources to do this. Get into real estate, okay? Get a plot of land, get a house, get whatever. And again, you don't even have to live there forever. You just don't, okay? You can get a house that you can afford. Like, say you're renting right now, and you can actually currently buy a house that's like, you're like, I don't really like that house. It's not that big, you know, it's not really that nice of a place. You can fix that up and you can make it a nice place, okay? You can do that. You can get the house. Again, it's that you own something. It's that you own something tangible, even if it is a fixer-upper, okay? Even if it's a fixer-upper, but it's better than you renting. Now, I'm not saying go and put yourself and your family into terrible living conditions or whatever and start, you know, breathing black mold or whatever just in order to say that you own a tangible asset. Don't do that. Do not put yourself in danger, you know, just to say that you own a house. That's not what I'm saying. But if you are renting and you actually have currently the ability to get the programs and everything else of that nature to then get yourself into a tangible asset, even if it needs some work or whatever, get it. Because that is appreciating more than your rent was, right? You're not making money off renting. You're not. You're not. You're not making money off renting. Oh, but I'm saving money. No, you're not. You're not saving anything. You can't save anything because inflation is real. Depreciation of fiat is real. It's not the gold standard, okay? Your money doesn't just go along with whatever, you know, the current price of gold is. It just keeps going down every single day. And as the world is turning towards de-dollarization right now, your money is worth less and less and less every day, okay? Leverage what you got. Get yourself into a tangible asset. It is essential for your future. It truly is, okay? Stay smart out there, guys.